Hey guys, so over the past few days and weeks, the market has dropped massively, and a lot of you guys have been asking for an update on dividends. As you all know, dividend yields are basically based on the stock price. So if the stock prices are down, then there's a big chance that the yields will be relatively higher as well. But before I begin and before I show you select stocks and their dividend yields, please remember this. There are some assumptions into this. Number one, I am basing still the dividends based on 2019. So just to give you an example, Globe's dividends for 2020 is at least for the first tranche of dividends that they gave this year. Remember, Globe gives out dividends 4 times a year. The dividends they gave out this year is already higher, at least for the first tranche, versus what they gave out last year. Last year they gave out 91, but I think the one that they gave out for the first tranche this year is around 27.5, so that will give around 107 to 108 pesos per share dividend for Globe. So there's a bigger chance that yields will be higher. But here's the thing also. So the assumption here is it's based on 2019. It's based on 2019 dividends. There's a chance kasi that since the dividends that they're giving out this year for 2020 is based on 2019 earnings, if their earnings are good in 2019, then the yields would be still relatively good, either at almost the same rate as last year or even better. So let's see how it goes. And number two, please do note that the stock prices here is based on, I think I measured this around 11 or 12 noon today. Today's March 24. So the closing price might differ, but if there's no large swing or large movement, it won't really be as different as what people would note it to be. So comment below if you want to know more. Comment below if you're excited. By the way, this video is for people who is basically interested on dividends. And by the way, before I also continue, dividend basically is these are for people who just want cash flow, meaning you buy a stock, you get the dividends, and the yield is already acceptable to you. Then it's worth holding, and you don't care if the market crashes, the market goes down, or it has a semblance of it being a downtrend still, because a lot of people who are into dividends, what's important to them is uh, the cash flow that they get from the dividends, then bonus na lang yung capital appreciation that they get from it. And that's a good approach also to look at it, because if you're after the dividends, it's just like buying a property, it's just like buying a condo, it's just like buying a townhouse that you're collecting rent. Then while you're holding on to it for 2, 4, 6, 8, 10, 12, 14, 16, 18, 20 years, the property prices in that area are going up. Hence, since it's going up, you get to also raise the rent as well. So if the company is good, the stock price will go up. As the stock price will go up, the dividends also are following. But the context of this is, please remember, it's March 24. The market has crashed. We've seen the market go down massively over the past few days. We've seen it been battered down. We've seen it go down to a very, very strong extent. That's why there's a lot of attractive finds that you can see in some of the stocks that are here. So I've ranked 50 plus stocks, and let's just try to go through them one by one. And I really do hope that this gives you tremendous value. So GT Capital, 400 pesos per share. Dividend yield is still very, very low, 75%, 0.75%. JG Summit, 0.81%. Please remember this has already dropped. No, the first time I did this, I remember JG Summit was around 80 pesos per share. Number 48, SM, 755, 1.21 BDO, 93.9. So as you can see, a lot of the stocks that don't really give high dividends, now their dividends are still close to the 1% level. BDO, SM, JG Summit, GT Cap, because of the drop, your yields are not still super attractive, but better off than where they were before. SM Prime, 1.34. Security Bank, 1.47. RRHI, 1.48. Phoenix Petroleum, 1.58. San Miguel, based on 84.65, is at 1.65. STR 1.84, Mega Wide 1.88, AC 1.92. Interesting though to see AC hit 1.92. Again, I think at the start of the year this was also around 700, 800 pesos per share. So though it's not super high, but you have a bonus of its possibility going up in stock price, plus whatever percentage gain that you would get from it. FEU is at 2.25, Pure Gold 2.57, Jollibee 2.63, Metro Bank 2.71, IMI 3.06, CEU 3.08, URC 3.15, Bloom 3.37. Bloom also has gone down. No? The last time this was measured, I think it was around 10 pesos per share when we made this video. Mega World 3.52 at 1.99 pesos per share. Who would have thought Mega World would go back to 1.999 pesos per share? By the way, if you're new to this channel, I forgot to introduce myself. My name is Marvin Germo. I'm a stock market trader, an investor, and I make daily videos about investing in the stock market. At this time, it's primarily focused on dividends. So if you want to know more about the stock market, how to invest, and videos like this, I hope that you subscribe and press the like button so you get updated every time I come up with new content about investing, because I really believe that in times like this, when the market is down and you know what you're doing, it's what will propel you to earn, if it's not in the next few days, not in the next few weeks, but it will position you on how you can do better on your investments for a very, very long time. FGen, 3.59 pesos per share. UBP, 3.64%. Sorry, it's 3.59%. UBP is 3.64%. Now it becomes more, at this rate, now it becomes more interesting already because please remember, if the stocks that you are buying with dividends and the yields are better than bonds already, when I say especially retail treasury bonds, the retail treasury bonds, if you hold it up until maturity, you don't get any upside. So this is how you can also spin it. If Union Bank at 52.25 pesos per share gives you 3.64%, and a retail treasury bond that you buy and it will give you 3.64%, let's say it's almost the same, at the end of a 10-year period, you get 3.64% for the retail treasury bond for the next 10 years. However, your money doesn't grow anymore. Union Bank, again, that's where fundamental analysis will come in. That's where you need to know what you're buying. If the company is grossly underpriced, the company is growing, there's a big chance that your dividend yield at 52.25 stock price that you've bought it would give you a larger result still. That's why it's very, very important, and I've reiterated this in a lot of the videos that I've been making, that kailangan at this point in time, you need to have cash, because cash, kumbaga sa barel, bala nyo yan. It's something that you can use in order for you to be able to add to your position as well. So you have Union Bank, 3.64%, RLC, 4.02%, AEV 4.22. Now it becomes more attractive because once you go above the 4%, you're beating other bonds already. Aboitiz Equity Ventures 4.22. Stock price dropped to 31 pesos per share. FPH 4.46. MPI at 2.37 has now dropped to 4.64%. Please do note also that one way to also segment this is you have to figure out which among the stocks that the growth is somehow threatened, meaning in the next few years, especially if you're a long-term investor, that if you invest here, you invest in these stocks, who among these companies may have some political risk, who among these companies may have some growth risk, meaning based on the lockdown that we have, based on the coronavirus, based on this pandemic, who among them may be affected in year 1, 2, or 3 as well. Because if, please remember, dividends are a portion of their earnings. If the earnings of the company gets hit, then there's a possibility that, hey, when they're hit, they won't be able to get as much earnings, and hence they might not be able to give as much dividends as well. So MPI, the threat of MPI again is Maynila. The threat of MPI is what happens to their concession period as well. So there, we're at MPI at 4.64. Think about this, guys. We are at number 23 pa lang, but a lot of them already are starting to beat some retail treasury bonds and corporate bonds as well. So how much more if we go higher? 22, Nickel Asia 4.73, LTG 4.87%, Globe Telecoms 4.9%. So please remember, just context also, if Globe gives, for example, 108 pesos at its current price, the yield will become 5.82. That is if it gives 108 pesos per share. So that's why it's very, very important on how strategic you are on how you start to buy it. Please remember, if you looked at Globe 2 days ago, the stock price would have been lower because today the stock price is up. Then yesterday the stock price also was massively up. That's why the dividend yield of Globe, if you came in 2 days prior to this, would have been better than 4.9% as well. STI 5%. BPI 5.06%. Whoa! Wow, this is so interesting. If BPI maintains at 53 pesos per share, it's giving you a 5% dividend yield. That's so interesting. If you compare it with BDO, BDO would only give you 1.28%. I'm trying to see if there's Metro Bank here already. Oh, there seems to be no Metro Bank yet. So this is so interesting. If you analyze it also, Union Bank has 3.64. So if you try to slice them head to head, the banks that we have here, you have BDO at 1.28%. Then you have, I think I saw, and there's Metrobank. Metrobank's 2.71%. Then you also have Security Bank at 1.47. So the ones that have relatively high dividend yields in terms of banking so far, based on this, is Union Bank at 3.64. Then, if you move up the rank, you have BPI at 5.06%. We are now number 18. So let's see. Comment below, guys. Who do you think is 17, 16, 15, 14, 13, 12, 11, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. So I want to know who do you think will make it. Number 17, Rock Property Development Company, 5.19%. Call Financial, 5.35%. Philippine Stock Exchange, 5.68%. Number 14, Aboitiz Power. Oh, this is interesting. Energy company that is very, very important, very, very vital on how the Philippines will grow. Please remember, Aboitiz Power is the Ayalas of the Visayas. Please remember, Aboitiz also generates and also distributes energy in the Visayas and Mindanao period. So this is 6%. DNL, 6.15% because of their massive drop. Shangri-La, 2.7. 2.7 pesos per share. Dividend yield is at 6.5%. I just want to submit this to all of you though. For Shangri-La, if you do note, Shangri-La are hotels and malls, and they also have some condominium slash property development. But please remember, because of this COVID situation, most of their hotels, especially the ones in Boracay, especially the ones in Cebu, I don't know the ones in Fort and Makati, how big are the occupancy rates in it, but for sure, Boracay and Cebu, Mactan won't have a lot because a lot of the tourists that we have going to Boracay and going to Cebu are Korean and Chinese, and they're one of the biggest hit from this COVID situation. So this may look good, this may look attractive if you're just looking at it from this year, but if you want to hold it above and beyond 2020, then the dividend yield for 21, 22, 23, 24 might be uncertain yet, or at least even for 21 and 22 because of the decline of tourist arrivals here in the country as well. Comment below if you're learning. Number 11, ICT, 7.35, another Rason stock. Number 10, Meralco, 7.72%. This is interesting again. Why? Again, Meralco, defensive company. Meralco, energy, electricity. Even though there's COVID, a lot of people will still use their services. A lot of people will still pay. Please remember also that people will skimp off eating out, people will skimp off buying that car, people will skimp off buying that condo, people will skimp off, I don't know, buying that new phone, but they won't skip off paying their Meralco bill. It's a utility, and at this point in time, the dividend yield is 7.72%. PLDT 7.79, similar to what I mentioned with Globe, no? That think about it this way: we're all at home. All of you guys are watching this via YouTube. All of you guys are streaming this, meaning you're using data, meaning Globe, PLDT, based on all of this, will have a large stockpile of earnings, and I can already see it, the usage of data, a lot of people playing those video games, a lot of people watching Netflix, a lot of people consuming information on YouTube. PLDT and Globe will make a lot of money in this lockdown period. Number 8, FLI 7.82%. Again, the risk lang for this is when there's a threat of a recession, when there's a threat of a market crash, companies like this may feel a bit of a hit because a lot of people would skip off buying houses or want to commit into something long term if they don't have the money or they see uncertainty into it. Number 7, Vistaland 8.27%, GMA 7 9.59%. Just so you know also, GMA7 though historically gives relatively high dividend yields. I've been buying their stock for dividends for quite some time already because of the yields that I've been getting. So this is not a surprise that GMA7 is part of the top 7 highest stocks, at least of the ones that I've measured here. There might be other stocks, but they're not into something that I'm including here, or at least I'm watching. Number 5, Manila Water. Manila Water is at 8.82. Again, the risk though for this is they're not gonna be paid anymore for them winning the arbitration case. They're not also gonna raise rates, and there's a fear that they might lose their franchise. That being said, even though this is 10.32, 10.32%, it may not be something that you would want to hold on to because of a lot of the political risk that's out there. So that's number 5. Number 4, Semirara 11.64, which a lot of the DMCI stocks, no, they have a perfect storm. Everything that could hit Semirara has been battering them down. That's why they're now at 10.74 pesos per share. Number 3, DMC 14%. Please remember DMC owns Semirara. DMC also owns Manila, then DMC also property development. So again, as what I've mentioned, the risk that people won't be paying or at least getting new condos will affect their growth also, especially if this lockdown period drags on. Number 2, SPC. I've been sharing SPC for quite some time already. I've been sharing that SPC, power company, very, very defensive. Utility company, it's something that people need. So this 15% is very, very high, very, very attractive. I guess the drop in the market just will just give an opportunity for people to buy SPC at cheaper prices and giving them a chance to get a higher dividend yield. And lastly, Cebu Pacific, 38 pesos per share, 18.42%. Now, pros and cons. Number 1, pro is prices of oil are massively lower. It means that since Cebu Pacific is predominantly fueled by their cost gets hit a lot by oil prices. Since oil prices are down, it somehow would balance out some of the other underlying effects of this COVID situation. But here's the thing: generally, their income, their sales will be massively down because a lot of people are not traveling. A lot of people that have had travel plans are not traveling, rebooking, canceling, changing their travel patterns as well. So that being said, it going down to 38 pesos per share, it giving you an 18.42% dividend yield might not be something that's super attractive because of the uncertainty that since no one is flying, for sure it will impact their capacity to earn for 2020 as well. Not in the list, I believe Shell has a very, very good dividend yield also. But because oil is also down, there might be a chance that it impacts also their earnings. And guess what? If a lot of people are not driving around, it will also impact their earnings as well. So I guess that's it. I hope you guys got a lot from this. I hope this is something that added tremendous value to all of you. We are closing the 8-minute mark for this video. Super appreciated if you stayed up until the end. Comment I stayed if you did. If you learned so much from this, very, very important to get this word across about investing. And the reason why I continue to make these videos is so that while everyone's scared, there's still a channel that promotes content that's educational, that gives you a sense of what's happening throughout all of this uncertainty as well. Please remember, if you're into dividends, as long as the company's earning and as long as the dividends are consistent, as long as the dividends are growing, then you have nothing to worry about. Again, it will also require you to study the company that you're buying. It will also require you to know the company that you're positioning into, because without knowing the company that you're positioning into and just buying it plainly because you think the yields are high may be of risk for you, because if their earnings will be battered, then they may not have the ability to give you a higher dividend. So invest in growth that has dividends, but temper it also as long as their long-term fundamentals are still pretty much intact, then you have nothing to worry about as well. So again, just to qualify everything, this video is for people who are into dividends. This video are for people who just want to buy stocks with high dividends, hold on to the cash flow for years. This is basically not for traders that just want to swing or follow the trend as well. So the name of the game, if you are a dividend investor, is you want to buy a stock that's super cheap, but not just that, the growth and their ability to give out dividends are unchanged. So that's it for now. Marvin Germo. I hope this video added so much value to all of you, and I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.